Hey DigiCoin fam! The crypto world is on the edge of its seat, and we're about to find out if Bitcoin is headed for a plummet or a rocket ride to the moon. Grab your fave non-alcoholic drink, sit back, and let's dive into this wild world of crypto adventure together. First off, let's talk about Bitcoin's crazy ride lately. Are we seeing a breakdown, or is this just a bear's last hurrah before we skyrocket to new heights? We're about to find out, so buckle up and get ready for the thrill of your crypto life. Now, let's address the elephant in the room, the banking crisis. JP Morgan CEO has warned of more bank failures due to commercial real estate losses. With banks like PacWest down over 20%, it's clear that this banking crisis is far from over. But what does this mean for Bitcoin? Well, the financial system is built on trust. And as trust erodes, more people will likely turn to the transparency and security of cryptocurrencies like Bitcoin. So, in the long run, this banking crisis could fuel a massive crypto bull market. As we dive into the charts, we see some fascinating patterns for Bitcoin. Some traders are predicting a massive breakout, with Bitcoin reaching as high as $150,000 per coin. But as always, remember that crypto is a wild ride and anything can happen. In the short term, we're seeing Bitcoin trapped in a consolidation range. Will we break down to the $23,000 to $25,000 price range, or will we bounce back and build momentum for a bullish run? Let's watch and see how this epic crypto showdown unfolds. Regardless of the outcome, one thing is clear. Bitcoin and the world of cryptocurrencies are here to stay. And as more people become disillusioned with the traditional financial system, we can expect a growing interest in the transparent and secure world of digital assets.
In the course of 5 days, 3 banks have failed in the United States, and those lenders were critical counterparties for a huge part of the crypto industry in the country. They served as a place where giants like stablecoin issuers Circle and the largest U.S. crypto exchange Coinbase once held deposits. These banks warmed to the crypto industry before any other banks really got on board, and some of them have remained the largest financial institutions to the crypto world before they shut down. Silvergate's announcement of liquidation was the most dramatic, given about 90% of its deposit base was tied to the crypto industry. But Signature also had significant exposure, and the bank's closure was far more abrupt in a surprise announcement late on Sunday night. Among its directors had been Barney Frank, a key proponent of the Dodd-Frank Act in the wake of the 2008 financial crisis that transformed the financial industry. He said crypto was a common thread behind the bank closures and a new and potentially destabilizing force to the financial system. But he also said that financial watchdogs were sending a message to get people away from crypto. He told Bloomberg that Signature was singled out to be the poster child for that message. Nick Carter of Castle Island Ventures had long been critical of the government's actions to stifle the crypto industry, referring to the efforts as the Operation Choke Point scheme to marginalize specific industries by choking off their banking access. Frank's comments added fuel to Carter's argument, and Carter's point about Signature was that its assets were not as troubled as Silicon Valley Bank, where the concerns about bank runs and liquidity mismatches were so dire that it quickly became the second largest bank failure in U.S. history. Signature, once closed, became the third largest. There are real ramifications in real time. One big example of this, Silicon Valley Bank was a known banker to Circle, which had $3.3 billion worth of cash reserves in the bank, which amounted to about a third of its cash reserves. The market was concerned that this money would be trapped, and the USD stablecoin lost its peg to the dollar, trading about 88 cents on the dollar during the weekend. But once the United States announced its rescue of SVB and Signature clients, promising that all depositors would be made whole, that stablecoin rose back to meet its peg again as holders gained security that the underlying cash was safe. Circle CEO Jeremy Allaire has moved money from SVB given the bank's failure. But as he looks forward, he's voicing more criticisms about the fractional reserve banking system in the United States, and he's looking to advocate for a different method of reserving funds that could insulate crypto from banking risks. He's not the only one. Coinbase CEO says non-fractional reserve banking is becoming attractive, and he is even given thought to how Coinbase could engage in more banking activities, neobanking activities, in the middle of such a storm. The innovators, they're still innovating, and they're finding new ways to bank in what's a meltdown to the bankers of the biggest crypto firms.
So, DigiCoin fam, let's embrace this roller coaster ride and enjoy the journey together. Remember, we're all in this crypto adventure together, so stay chill, stay engaged, and let's explore this thrilling world of cryptocurrencies. Don't forget to like, share, comment, and subscribe to DigiCoin Daily for all your crypto news, analysis, and good vibes. See you next time, and as always, happy hodling.